Okay, so good day team. Trust we all are doing good. Welcome to my second video on how I trade. And in this video we're talking about the transparent FX trading style. Now, let me make this clear before I begin this video. Um this is just another of the trading style I used to trade, and it still won't guarantee you profit if you trade this trading style, be it alone or with other trading styles. Remember, losses are inevitable in the market, so you lose money at some point. So I'm just telling you that to make it clear. Now, transparent FX course, I'll be going through the important things in it, and after watching this transparent FX course, I beg of you, yes, go to my YouTube channel and watch um most of my videos there, because most of them are based on transparent FX trading style, starting from the first video I did, which is the first video on the 100 days of tech analysis, down to any of the videos actually. Yes, most of them are transparent FX trading style, so you'd actually understand the concept behind this video properly. So connecting to my internet, let's get right into it. We open on my trading view in a few minutes and we start. So yeah, to my trading view.com. So let's go to the chart now. I'll just take this off, yeah, and we are good to go. So I'll delete all of this now. um the key things you need to know about the transparent FX trading style. So the very first thing you need to know is relevance, price relevance. Now he deals with price relevance. Price relevance, how? He deals with current structure in price or current phase of price. So he doesn't talk about all the 1990, he just deals with the current thing price is doing. So that's what he deals with, price relevance. Now his trading approach is simple and all, and there are some things he added that doesn't make sense, which is the indicator part and the number level part. It really doesn't make sense to me, because of, if price will reverse off a certain level, it will reverse, no need of a shitting number at all. So his trading approach is just of three strategies, which is, as he calls it actually, which is the M and W pattern, the impulse and correction pattern, then the trend line and counter trend line pattern. So these are um his trading approach. I'll be talking about everything one after the other, one example on everything, but I will just explain a few things first diagrammatically before we move to the next thing. So let's start with the M and W pattern first, or let's start with the way he sets his chart. Yes, let's start with that. So I'll just let everybody see this, and I'll refresh my chart using this R button. Can you see that my chart, it shows the whole price action, but his own doesn't? This is how he does it. He just clicks on the screen and goes to settings, then comes to appearance, and he types in at this bar place. He just clicks it and type in 159, I guess. Yes, 159, and boom, yes, you just show relevance in price. And if you drop down to a lower time frame, what you see is just relevance in price. Now with that known, I hope I've given you an insight into how he does his chart. So let's just leave it that way for now on my own platform. So let's talk about how he trades. So I said he trades M&W patterns, impulse and correction, then trend line and counter trend line. Let's talk about them diagrammatically. So M&W pattern, what are M&W pattern? These are how would I put it? These are institutional patterns, yes, institutional market patterns, which we all commonize. But truth be told, it's not a regular chart pattern, it's an institutional chart pattern. So how did this M and W pattern play out? Now the M and W will form the first leg. Then the normal way an M forms, it will form the second leg, which is the B leg. Then price would actually project downward, then come back for a retest of the neckline of the M pattern, which is this point to this point, then before we expect a projection of price to the downside. Now to a W pattern, the first leg will form, then we have this, and price will project to the upside before we have a retest of the neckline, then we project back up to the upside. So just this way. Now with this said or this known, I hope you've understood the concept of M and W pattern. It's very simple and easy to trade. Very simple and easy to trade. So taking all of that off my chart, let me list a few things that Nick uses when he trades. He uses the Fibonacci and the box tool, then the arrows. That's what he uses. Now this M and W pattern, when they form, they tend to reverse off a significant Fibonacci level, which is the 61.8, the 50%, the 38.2, or the 78.6. Now let's say when this M pattern forms, let me move this aside and let me draw an M pattern. So when an M pattern forms, we have the A leg and the B leg. We will not draw our Fibonacci from, wow, we take our Fibonacci and place it from the swing high to the swing low of that movement. Then we expect price to reverse off one of this significant level. Now I can't say this is exactly where price will react off. Possibly price will react off here, or maybe possibly price will come to the 50, or maybe price will come to the 61.8 before reversing, or maybe price will go to the 78.6. I don't know which level price will react from. I don't know. The only thing I know is price is likely to come back to the neckline. Sometimes price never comes back to the neckline, but most times price is likely to come back to the neckline. If the neckline is always a previous area of structure, so there is a huge tendency that price comes back to the neckline. The same thing applies to a W pattern also. So I hope that is clear. Now with that being said, let's go on our charts and look for M and W patterns. So M and W patterns, it is on our chart. Now it uses all time frame, same as Astro FX, and it just uses all time frame. So if it checks the monthly time frame and it doesn't see a M or a W pattern, it would go to the weekly time frame. Now on the weekly time frame, it will look for a M and W pattern. If it doesn't see any, it will go to the 1 hour time. It will go to the daily time frame. If it goes to the daily time frame and it doesn't see a M or W pattern, it will go to the 4-hour time frame. If it goes to the 4-hour time frame and it doesn't see an M and W pattern, that's it. It's going to ignore the chart. But in this situation, we have a M and W pattern on the weekly, a W pattern on the weekly time frame, to be precise. So how do I know this is a W pattern? Look closely. You have highs from this point, first leg, then this one candle acted as what? The third leg. Then what do we have here? When the W pattern formed, it projected to the upside. We take our Fibonacci from the swing low to the swing high. Wow, sorry about that. Oh, Z, and we're back on this chart. Okay, yeah, we take our Fibonacci from the swing low to the swing high of this move right here. Then we expect price to come back to either the neckline or one of these Fibonacci level. And as you can see, it never came back to any of this Fibonacci level. What will you do in this case? You ignore the trade. It is not your trade, so you don't force it. You don't force it at all. So let's look for another example on this chart. Another example. Let's look for another example on this chart. Wow. Okay, yes, we have a W pattern right here. Look at this first leg, then this, then we have the third leg. I mean the second leg. Now let's zoom into this closely. Now that you've spotted this W pattern, what will you do? You've seen this leg has played out. You pick your Fibonacci from the swing low to the swing high, which is here. Then you wait for price to come back to any significant fib level. Now when I say you wait for price to come back to any significant fib level, you don't just buy because of it at this 38.30 fib level. You don't just buy because it's at the 50 fib level. You don't just buy because of the 61.8 fib level. You don't just buy because of the 78.6 fib level. What you actually do is you watch for price action and you watch for it at a significant area. Now this is a significant area. Why? Because of there was congestion here. It rejected, acted as resistance, but yeah, acted as what? Support and support. So the only thing you will see on this chart as at that moment, I can use the replay to my trading fee is paid. So the only thing you will see would be this during your whole back testing, during your whole trading. Let's say this is just a real life market situation. This is the only thing you see. You see that this has acted as resistance. So you know this is a significant level. You just put your trend line, your box tool at this level, and let price do its thing back to the level you're expecting. So just let price do its thing back to the level you're expecting, which if it were to be me, I'll be watching the 61.8 fib level actually, because I know it's a golden number, like people call it the golden number. So I'll be watching that level very well and waiting for price to react. So let me pause here. Now, okay, let me pause here. Now, I know a lot of people would have bought this candle here because of they feel this is an indecision candle. Yes. A lot of people will buy, but the thing is to understand how price reacts. If you look closely, this is an impulse. What is this next? You should expect a correction. Simple math. So it's not just buying because of this is a correction. It's waiting for significance of price to play out before you buy. Now, playing this fully, you can see if you bought here, like this candle, your stop loss would have been hit, and you just cry, baby, cry, and price will just project, leave without you. As you can see, it's still all of a sudden smash. Even if you put your stop loss here, it will smash it. And yes, let's cancel the replay. Okay, so I hope you've seen how a W pattern is. We've not seen an M pattern since. We've only seen two W pattern, which is this is the first one, the trade we ignored, and seems I found an okay. I've seen an M pattern. Well, this is the second W pattern that we've seen. So the thing is, okay, let's go to the M pattern now. Now look closely. First leg, then second leg to the downside, and we had the rate test. So what would you do in this situation? Real quick, let me take this off, replay 2, and this should do it. So we've had our M formation right here. What would you do? You take your Fibonacci from the swing high to the swing low, and you watch for price to come back to a significant level. Remember, there is always the net line. So this is the net line right here. So you wait for price to come back to the net line or a significant Fibonacci level. And what do we have? Price came back to a significant level, went a little bit above it, and what did you have? You got your entry at the 61.8 exactly. So you see, that is how the M and W pattern is being traded. Very easy to trade. You just need to know what you are doing on the chart. That's right. You just need to know what you are doing on the chart, and you see how easy it is to trade. So that's it on M and W patterns. Actually, that's it on M and W patterns. So yeah, that's just basically it. It's not difficult at all. It's very easy to trade. Now to the to the next strategy, which is the impulse and correction strategy. Now, the first video I expect you to watch before watching this is the what are they calling it? It is the Falcon video, how I trade Falcon. So if you watch that video, you will understand impulse and correction pattern. But let me explain impulse and correction pattern again. So when we have a move to the upside in alignment to the trend, it's called an impulse. If we have a move against the trend, it's called the correction. So impulse, correction, impulse, impulse, correction, impulse, impulse, and so on and so forth. Same applies to a downtrend. Impulse, correction, impulse, impulse, correction, impulse, impulse, correction, impulse, and so on and so forth. So that's how it is. Now, how do you trade the impulse and correction pattern? The Fibonacci is a major tool in this strategy. When an impulse happens, it will go in alignment to the trend. You have your swing low and you have your what? Your swing guy. Now, a correction, you look for a correction back to a significant Fibonacci level or back to a significant area of structure. So placing this, let's say the correction has started and you've placed your Fibonacci, you'll be looking for opportunities to buy at this level, to buy at this level, or to either buy at this level or to either buy at this level. So depends on where price gets to and react before you now start looking for buying opportunities to buy the next impulsive leg to the upside. So that is just it on impulse and correction pattern. The same approach applies to um a downtrend, in a downtrend, which we'll see very very soon. So let's go on the chart real quick. Yes, I can use this monthly charts to explain, but it will be very crazy. But let me still use the monthly charts to explain. So this is an impulsive move to the downside. We know this is the swing guy and this is the swing low. Yeah, right here, this is the swing low. What do we expect? We expect price to reverse or correct to a significant Fibonacci level. And what do we have here? Price corrected to the 50% fib level and look left to get right. It is also a significant area of structure, acting as what? Support, resistance. Then you expect it to act as what? Resistance also. So that is just it on impulse and correction pattern. Let's now, this impulse and correction pattern is not that you just put it on big price movement. See, you can also do it on small price movement again. This is an impulse to the downside, this is a correction. Look at it, swing guy to swing low. What do we have here? Let me zoom in. Swing guy to swing low. What do we have? We had price retracing back to the 78.6. If you put your rectangle, look left to get right, look at it. The 78.6 fib level was just a previous area of structure. See, it was just a previous area of structure. That's why price reacted and plunged down. So like I said, it's all about confluences. So let's drop down to a lower time frame again. Let's drop down to the daily time frame now. On the daily time frame, there's something amazing right here. Okay. Feeling quite sleepy, sorry about that. So on the daily time frame, look at this. We had an impulse to the upside, so we take it from swing low, which is the significant one, to the swing guy, which is this. We expect price to come back down to a significant fib level and see what we had here. We had the zone between the 50 and the 38.20. What do we have immediately? We had buy move to the upside. So that's for an uptrend. Same thing here again, swing low to the swing guy, which is here. Price came back to the 78.6 and we had the buy move to the upside. So that is just it, simply defined. That's just impulse and correction trading strategy. Very easy to understand once you put your mind to it. So it's nothing difficult at all actually. And let's go to the last strategy, which is the trend line and counter trend line. Oh, I mistakenly deleted everything off my chart. Okay, we said the last strategy is the trend line and counter trend line. So let me explain the trend line and counter trend line strategy to you. So this is a trend. This is a trend to the upside. Remember, price is moving in a trend. It will do like this, come back, move like this, come back, move like this, come back, move like this, come back. Now, what are we looking for? We're looking for opportunities to buy here, to buy here, to buy here, to buy here. Same applies to a downtrend. If we had a trend to the downside, we know price will do this. So what are we looking for? Opportunities to sell here, to sell here, to sell here, and sell here. So the thing is just trading opportunities. Now, where do the counter trend line now come in play? This is where the counter trend line. We use the counter trend line to mark out this trend against the normal trend. We use the counter trend line to mark out this trend against the normal trend. Now let me show you how the whole thing is, like what the whole thing is. So turning off this chart. I'm sorry I couldn't use many charts as an example. Sorry, but just after the whole, if you've watched this video and you still fail to understand anything, just come into my inbox. I'll walk you through on it, and also you can ask for transparent FX trading course link. I would give it to you. Trading course was given to me by this guy BJ. Also, yes, BJ gave me the transparent FX trading course after I almost paid somebody for it. BJ, thanks for that also. So that's just it. So to the trend line and counter trend line strategy. Now look at this closely. This is a trend. A trend. It's sold here, impulsed to the downside, and we had what? A counter trend. So what do? We mark out the counter trend like this. Then we look for opportunities to sell when price comes back into this area. And what do we have immediately? Let's say we took a sell from this spot, we had price plunge back down. So it's simple arithmetic, it's simple logic. If I go down to a weekly time frame, yeah, and I just mark out this from this point to this point down here, look at it. We had price impulse to the downside. Then what do we have? A counter trend. Marking it out, we can see it's broke and still came back. When price went into this area, we had a counter trend. It's broke and we still came back down. Then we had a major move inside, impulse to the downside, a major correction, that's a counter trend. Then what do we have? Price still plunged. So you see, it's simple arithmetic, it's simple thing. Let me show you another example on the daily time frame. Price was impulsing to the upside. What do we have? A counter trend. We mark out the counter trend, and what do we have? Price breaks and move to the upside. Price impulse to the upside, we had a counter trend. We draw the counter trend line, it broke out, moving to the, so this, you should know that it's a counter trend. And what do we expect from the counter trend? Expect it to move against price and break out and move to the upside. So that's just simply the trend line and counter trend line trading strategy. Nothing difficult about it at all. So I hope I've simplified the way unique trades. If you still fail to understand, my inbox is open. Ask your questions, or you can ask your questions on the group. There are people who trade transparent on the group, there are people who trade Falcon on the group, and there are people who trade AstroFX on the group also. So just ask your questions there or in my inbox. I'll get back to you. If you want the trading course for transparent FX, come into my inbox. I'll give it to you free. It's just, yes, you deserve it for free because you paid for mentorship and you deserve to be mentored. So that's just it on this. I hope you learned a thing or two from this video. Peace.